Good afternoon. This is Tom Aspray with the Viper Report. It's Thursday, March 10th, and the roller coaster ride in the stock market has continued this week. One of my favorite screens where I check the markets and the market internals. They've improved, but still decidedly negative. 1,000 up, 2,200 down. You can see this chart of the S&P. Opened weak, rallied, another decline, rallied, dropped, and is now rebounding. Down 25 points. It was down over 60, I believe, at one point in the day. So Tuesday morning was even more amazing. I got up at about 3:30. The futures were down about 100. And half an hour before the opening, they'd rallied about 70 or 80 points from that low. So what's the outlook for the market? This is the front page from this morning's Viper ETF report, March 10th. You can see, we are getting closer to the Stark bands on the downside. All the market AD lines are negative, daily, weekly. Even though the Qs were up over 3% on Wednesday, they're still 2% below the 20-day EMA. So that means any rally could still go at 2% above where they closed Wednesday and not break the downtrend. Percentage-wise, pretty much everything except the Russell is below 10% below its Stark minus band, and of course well below the 30-day. Let's look at the daily chart. So we have the S&P, the SPY. You can see that the 50 in pink has dropped below the 100-day moving average, confirming the downtrend we're in right now. You can see it in things started really deteriorating at the start of the year. Here they have the S&P 500 AD line. It's still one of the strongest ones, but, below its moving average. First sign of a change, moving back above that moving average, has to overcome this downtrend line B to indicate that the decline is over. We have the stocks only. It's even weaker. It's made lower lows this week also. Near-term resistance at this line E, and the all NYSE, because the bond market is looking even weaker. You can see this downtrend line F, we're quite a ways below that. So it'd take time and positive AD numbers to turn it around. And so maybe at the end of March we can get a bottom here. Though the trend is negative, there are some encouraging signs. This is one, the NASDAQ Composite. We've talked about in the past. You can see that we've dropped to new lows here, but we have lower highs in the stock and NASDAQ stocks making new lows. So there's less selling pressure here as long as we stay below this downtrend, because prices are weaker, but there are fewer stocks selling off. The new highs, we need to get a move above this 167 line B to turn it positive. This is one long-term tool I look at, the McClellan Summation Index. It's a cumulative reading of all the McClellan oscillator readings on the NASDAQ. It got down to almost minus 1,200 a few weeks ago. It's not often gotten down that low. March 20th, it was down minus 1,350 at the COVID low. 2018 low, it's about the same range. 2016, it only got down to minus 900 and turned up. So it looks like it's in the process of bottoming. It really needs now to move above this previous high to suggest that the AD numbers have turned the corner. Most of the positive signs are on the sentiment area. This is a weekly chart of the SPX. You can see we got down to the Stark equivalent bands here a couple of times. These long tails here. Even though we made lower lows, every time we dropped down that, the market was well supported. We have the weekly AD line is below its moving average. It made a high with prices at the end of the year. So there weren't any divergences. Moving average is still rising slightly, but you don't want to see this getting a strong downtrend. So the next couple of weeks will be important. From the AAII, the bullish percentage sentiment, we hit 19.2 about 3 or 4 weeks ago. You can see that's a really oversold level. So when that many investors are, or that few investors I should say, are bullish, it's a positive sign. It's a contrary indicator. So we popped up to 30 a week ago. This week we've dropped back down to 24. So this is consistent with a potential market bottom. At most lows it gets quite low. Below this we have the National Association of Active Investment Managers reading. So they dropped below 40%. This 0.3 here, very low equity exposure. You can see they typically, sell ahead of a decline, and they've already started to turn up. So you kind of want to see us break this downtrend to suggest they're moving back into stocks. Also on the sentiment, the put-call ratios picked up sharply yesterday as the market was rallying. Huge gain, the biggest gain since June 20th of 2020. The difference then was the AD lines were roaring ahead to new highs. So you can't, anytime they say that's the best day, you don't immediately make any inference of until you look at the charts. So total put-call ratio, 1.14, so 14% more puts than calls. The index, much more put buying, 1.67. A report on one of the financial news networks said that a lot of heavy put buying in some of the ETFs. That's consistent. When everyone jumps on the short side, that's generally a contrary indicator. Another sign that many people are too bearish on the market, this is a ratio of the investors' intelligence, bulls and bears. It is dropped below 1. You can see it drop well below 1 here in 2020, 2018, 2015, 2016. The bear market low in 08 and 09, you can see it was very low here. So that suggests that there's the negative side of the market is getting pretty crowded. So that either means that the correction, is going to end here in the next couple of weeks or so, and either lead to a very sharp market rebound that could be part of a top building process, or it'll just leave everybody in the sidelines because everyone else is sold out. This chart was also published in today's reports. We have found some things to buy. We got into TAN, that's the solar ETF. We saw this move up to the upper Stark bands. Relative performance, OBV was strong. We had a pullback into the end of a week ago Friday, right into the pivot moving average. So we got in that right near this. Both our buy levels were hit. Already made it to the R1. It's down a bit today, gave up some of the recent gains, but it still looks good from the long side. Both the RS and the OBV have made new highs. These are our current ETF positions. Holding on to XLP for quite a while. We like the value. We've been discussing the value and growth relationship still favors value. Small profit in there, and it has a yield. Same with healthcare. GLD, we had a nice run there. It pulled back sharply on Wednesday, but we're looking for the end of the correction here to add to that gold position. You can see TAN as of closed at 78.82 on Wednesday, up 16% in a little less than a week. Another one we like is the ITA, the iShares U.S. Aerospace and Defense. It's down slightly from where we got in, but we still like the looks of it. We also got in Valero Energy. It had a nice pop to the upsides, pulling back a little bit. Relative performance still looks pretty strong, as do the weekly indicators. Volume, the OBV is lagging a little bit, so we're just 50% long that one, and we'll be watching it closely. Freeport McMoran also, we're looking to add to that position. We got it long before the breakout, had a nice run up to the R1, a pullback here, so you can see the OBV looks pretty strong, as does the relative performance. And Barrick Gold we were long for around 1892, so right around in here. We sold half of it out at 23.12 for a 22% profit. We're holding on to the rest. Gold is down a little bit Thursday too, so we're kind of looking for some stabilization with this pullback. Do not think the move in gold is over, so we'll be looking to add to that position probably next week. If you want to learn more about market sentiment, there's a recent article up on the Viper Report homepage. Shows you how it's worked over time. And the high-low analysis is this article here. And of course, if you want to subscribe to either the Viper ETF or the Hot Stocks Report, you can sign up on the viperreport.com. You get 2 reports at least. With the volatility, we've probably been averaging, 3.5, if you will, reports a week, or on stocks, the Viper Hot Stocks Report. Occasionally we make recommendations before the close like we did. We had a new buy recommendation on Wednesday. It's too early to tell whether it's going to pan out for us or not. Each is only $34.95 a month. And also suggest you follow me on Twitter if you want to see what my thoughts on the market. I'm pretty active there. So should be interesting to see where we close the week. It looks like we'll probably, unless we do something dramatic, it's going to be another week on the downside. So it'll be 4 out of 5. So, the middle of March into the end of the March will be an important time period. Thank you for tuning in and hope you found it informative.